Okay guys, I want to recap on 10 trades I took on 4 pairs, and I had some wins and some losses, and I just want to go over the statistics to show you guys how well this works. So first I have Euro JPY, and on the 5-minute we had, again, a hook, fair value gap with a strike area where there were multiple lower progressive strikes. We had a hook, a dump, and then we had a strike area, again, progressively lower strikes. And then we have these yellow bars, and on a closer view, that yellow, right, again, that buy action that acts as resistance. And I was also taking London into consideration. So we had, here was a liquidity zone, which was a less than a 1-to-1, so this was my first liquidity zone take profit. This was my second, and the fill here was my full target, okay? Right around London Open, I took this short. However, on Euro JPY, it was an initial 3.4 RR, and there was no liquidity pull on the high here. There was an exhaustion bar, okay? So that was one of the criteria, but it wasn't ideal, right? There was not, it respected this and started a dump, and I had my stop up above this. So that was what the trade looked like. It pushed up, and then as it corrected, I moved my stop down to the top of this because I did not like my risk to reward. I wanted it to hold this level. And it pulled in, and I took partial profits before getting stopped out. And then at the end-ish of London session, we broke through this and we pulled liquidity spot 1. Okay, so we had liquidity spot 1, 2, 3, 4, 5. This is the strike area I was looking to get involved in, but I wanted to see it pull somewhere into this area, and I needed to have a stop that was adjusted above this. Okay, so as I saw aggressive buying, let me get rid of some of this shit. As I saw aggressive buying here, on the 2-minute, it put 3 red bars, right? And I like to see these things fade. And this is a big part of my strategy is I am selling bull trap breakouts into aggressive selling volume. And as I see this, I am anticipating we're going to hold, and we do. And as we drop into the new liquidity zone here, and because this had already been pulled, this was my second target. It hit both those targets, and I just want to show you something. I took the entire trade off here, right? I was feeling a little anxious about the trades yesterday. I don't really know why. Maybe this is something that I could work on, but I took the trade off here and it hit my full profit target. Okay, odd USD, same situation, okay? We've got a strike area and we've got a hook with a fair value gap. Here we have the same situation, and that was a trade that I had taken on either Monday or Tuesday. So I was looking for it to either hold this area or potentially hold this area. So as I entered, my odd USD was a 2.5R initial. So it was something like this. As it confirmed, I moved my stop, and my targets were liquidity zone 1 and liquidity zone 2, and then final was down here. Okay, and this is prior liquidity I was looking at, this white line. Okay, I got stopped out of this, but I did take partial profits. Right, as it moved into this, I took partial profits. So this ended up being a scratch trade, pretty much break even. As this pushed up here, you can see on the 5-minute that we got some major wicks, and I was anticipating that this could do something like this. So my initial was a 4.5R, so it was like this. Okay, so my stop was a retest of these highs. I was looking for it to dump, and then I could adjust to the pivot. As it broke this low, I adjusted to the top of the pivot, which actually turned this into pretty much a break-even trade, somewhere between a 25 and 30 R. And again, as it pulled into, okay, this is one strike, this is two strikes, so this was my first profit target, this was my second profit target. I took profits here, and I closed the entire trade out here again. Didn't hold it, and look what happened. It perfectly interacted with this level. However, I closed it way too early, just like Euro JPY. Euro USD. Euro USD has not been doing what I want lately. Okay, same situation. Massive whip and a strike area. And then as we got a rejection here, I was looking to see if we had pulled liquidity, and we had not. I do not know why the screen looks like this right now. Whatever. So we had not pulled liquidity here, and this is what my stop looked like. So it was initially a 2.1 R, and my full stop loss was hit on this. Quick, too. I couldn't even adjust it. It happened, I wasn't paying attention, and that's fine. My next trade was here. As it pushed down to my TP1, this is my new TP1. My initial TP1 was going to be here, and probably somewhere in here was TP2 and then TP3, and that is for Euro USD. Here I re-entered, again expecting a sell-off. As it pulled into my TP1, my new TP1, and the reason being is because we have one liquidity zone here, two here. So my target, my first target is here. I took some profits, turned around, and I actually stopped myself out manually somewhere in here, only to see it do this, and then I re-entered the trade. So I was kind of irritated at that point, and then guess what happened? Completely ripped and went up against me. Okay, and that's fine. So it actually pulled into the spot that I really been hoping it had pulled into initially. Let me go on the 15-minute so I can deal with this. Okay, we had an aggressive rip, a dump. We came in here, and again, strike price. Striking situation, right, where it just tap, 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 rejected. Okay, and as it moved in here on the either 2-minute or 5-minute, I took an entry. And this is strategy 1. So my initial on this was a 2.5 R, I'm sorry, a 2R risk, and I adjusted it to a 7.5, 7.45. So initially it was like, okay, so it was like this. But this is a great, okay, we have a very good exhaustion push, a very weak pullback, right? Very, very shallow pullback, and a second attempt. As it comes up into this, I anticipate that price is going to do something like this, okay, and at least come down and take out this liquidity. These tend to be massive liquidity traps, and they almost always get taken out. So I'm wagering that I will get a pivot at some point, and then I can adjust my stop. As it came down and took this out, guess what? Pivot was adjusted to a 7.5 R. And again, as we came down and we interacted with this TP1 and this TP2, as we broke through this aggressive area here, which I was anticipating, maybe we do continue higher. I took almost my entire position off here. And guess what? It came down and it hit my TP2, my primary target for my first entry trades, my secondary target for my first entries on Euro USD, and this would have been a full amazing trade. Instead of getting a 7R, I got something like this out of it, so not terrible. But again, it ended up hitting my target, and I closed early. And guess what happened on GBP JPY? The same damn thing, okay? So again, same time, my entry was around 3:40. Most of my entries were between 3:40 and 6 or 7 p.m., which is between end of Tokyo session and first few hours of London session, okay? This is an area I wasn't super sold on it. I was kind of thinking that it would move above these highs. This was the ideal entry point. However, liquidity is here. And as I was looking in the market, we had already pulled the liquidity and we were in this button area. Okay, so as it started to push up and failed, I sold. And my liquidity zone, TP1 was here, TP2 probably somewhere in this order block, because this is a pretty strong held area that was held, right? We had a correction and it held this area. TP1, TP2, full TP. Hit my TP1 and then turned around and stopped me out for a small loss. And then I did the same thing. I entered short here and it came up and it was tink, 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 tink. And I was irritated because it was almost New York Open and I didn't want to get stuck in a huge manipulation that can happen at New York Open. So I closed this trade out manually somewhere in here. And then as I saw it pushing down, I decided, okay, I'm actually going to sell back into this, which was a massive mistake. But my initial, well, it wasn't a mistake, it worked out, but my initial R was a 2 to 1 and it adjusted to a 9 something to 1. So initially my trade looked like this. It's like, all right, I'm gonna see if it actually holds and starts to push down. As it broke down here, I closed my trade out at TP1. Okay, and as it started to break down like this, my trade went to something like that. So it went to about a 9 to 1. Took this LZ out, liquidity zone out, and I closed the entire trade. And you know what? That thing that I didn't think really had the oomph to go all the way down ended up closing in my full profit target and then some. So again, for all 4 pairs I traded yesterday, even though I took some losses, I would have had an excellent R throughout the day if I had held on to my final positions. However, because it had turned around on me a couple times and I'd only gotten partials and I was sort of break-even-ish for the day, I took profits early and then woke up this morning and realized that we had hit all of our profit targets. So in the future, I think what the best thing to do is to understand that these things do work out, that they do need time, and just use protective stops. And it's okay, like usual, to take partials. I always take at least half my trade-off at a reasonable area, right? Which is a liquidity pool on 2 liquidity zones. Okay, so again, on an aggressive push like this and a push like that, right? Aggressive push, weak pullback, push again. These are great times to get in for reversals. So on a reversal, we sell. We got 3 black crows here, 3 consecutive red bars. Right, and we're looking for a pull on what? Not the first liquidity zone, but the second. And I have noticed sometimes that we do hold the second, so I will usually take partials right around the time we move into that second, depending on what the R looks like, right? If it's like a 4R at the primary LZ or the first take profit area, then I'll definitely take half off. If it's only like this at 1.5R, I might take a quarter off. Okay, because I do want to let my winners run for me and I'd rather take small losses in retrospect. And then of course, my primary target, the one that gets hit the most, is that second TP, which tends to be a pretty good R, somewhere around 3 to 3.5. Okay, so as it moves into this area, I sell 50% of the position. Odd USD, right? We have first liquidity zone, second liquidity zone. We sell here, comes down. As it interacts here, maybe close out 20% of the trade. As it comes into this, close out another 25 to 30% of the trade. All right, here we did get stopped out, but in retrospect, right, now we have another understanding of where liquidity is. We're going to reject and we're most likely going to take this out because this is a massive bull trap. Where's the next liquidity? The next liquidity is here. Okay, so that's going to be my first TP on this trade, and it did hit. And then we have the previous liquidity, which is here and here, and then yesterday's lows was here. So these are my profit targets, and look how perfectly it tapped into this, okay? So again, this is just me going over strategy 3 and how you can make $500 to $1,000 a day trading this strategy in any market, as long as we are in a sell-off period and we can short this. And of course, the opposite of this is in a bull situation. And it's very same, very same. Okay, so the way to read this on a bull situation is you have a push up and a very strong manipulation that creates sort of like an order block. And then we have consecutive attempts to come into it that are weaker and weaker. So we don't want to see it flagging out. We want to see an ascending sort of channel, right, consecutively higher. And then I want preferably to see this actually break out of this aggressively and then make its way back. Pull some kind of structural liquidity in this zone, and then somewhere in here I am just looking to get in. I see a decent pullback, decent strength or something, and I'm looking for a 2-to-1 smoothed, right? So I'm looking for technically a push down here, so I want to get a 2-to-1. And as it starts to print that pivot and I see that it's moving to my first profit target, well, I can adjust my stop. And then I can average out my risk to reward. Okay, so maybe my average losses are between 100 and 150 points, and my average wins are between 300 and 600 points. So we average that out, and it looks something like a 4R or a 5R. Okay. All right, guys, that's today's lesson. Thank you very much for stopping by. As always, like and subscribe, and thank you so much for tuning in. See you next time. Peace.